a quadrillion-dollar market for the taking for blockchains like Stellar XLM. Trillions will flow through blockchains like Stellar XLM. This is part 4 of the standard, the gold standard, ISO20022 standard. And check out what is actually happening, where the price is going to go, where stocks are going to go, the Dow Jones in specific. We need to check out the 10-year yield, the Dixie. Nathan, over to you. Okay, that's great. Thanks for that, Nathan. So, as you can see, technically, on the charts, it looks like gold is telling us a story from back in the 1920s. It looks like that when the US switched to the gold standard, Bretton Woods time, it caused the Great Depression. But did it though? What we have to think about at this point is not just technicals. You have to understand what's going on around the world fundamentally within its own country, inside of the USA. What was going on with monetary policy? Monetary policy during the 1920s was loose. You know, it was a loose monetary policy. And money was being printed, loans were flying out, easy money. Stock market was roaring. It was only until the realization of high inflation was kicking in and people not paying back the money that the Federal Reserve decided to switch to the gold standard because of what was about to happen. And they switched right at that point in time to save the US dollar, to give it value. You know, when you're printing so much money, where's the value in that? You could just turn on a printer and how does it hold any value? Gold, there's only so much gold. There's only so much gold that you can mine. It's been a forever store of value since the beginning of time. So, when we think about that, the fundamental factors, we think about what we're going through right now. And this is the story. We can clearly see that the Dow Jones is in a bubble, along with the rest of the stocks, along with Bitcoin. Everything is in the bubble. We're in an everything bubble, I tell you now. And it will pop. It's a matter of time. It's likely to be at the last Fibonacci extension. And what's likely to happen is that we come into a new monetary policy, just like what happened with Bretton Woods. But it won't be gold this time. It will be crypto. Because all the government policy right now across the world, when you think about CBDCs, you think about crypto bills, you think about banks being legally allowed to hold crypto, remittance companies heavily involved in crypto. Isn't it obvious? But what's likely to happen is monetary policy will get looser. And then right at the brink of time, when the bubble pops, the new monetary policy is introduced. This was the whole point of Bitcoin. There's only so much Bitcoin. You can't create any more Bitcoin. Yeah? This is the point of some other cryptos. You can't reproduce anymore. Like XRP. Stellar is slightly inflationary. but it's hardwired in the code that it can only go so much higher. So much more will be produced, right? It's a different digital asset. And so, really, when we think about that, we have to think about where we're going in terms of Stellar XLM's price. When I say that Stellar XLM is nigh on down around 80%, that's a flaw to me. You know, it's not the only factor. We look at the fundamental factors. We look at other markets, stocks, other digital assets, other cryptos, Bitcoin, XRP, and see what they're doing, and realize that these cryptos, Stellar XLM and XRP, have already found the floor. Realize that the stock market has not been in the bear market. The Dow Jones, just outside, didn't drop below 20%. Realize that there is more room for it to go up. Realize that fundamentally the ECB has unlimited printing power to provide liquidity to banks across Europe, to banks such as Italy, Spain, France, Denmark, Portugal, Greece. All of those banks will receive money from the central bank, the European Central Bank, with its unlimited printing abilities. And the US Federal Reserve will follow suit. So we'll have more printing of money, more inflation, higher stock prices, and when we get to that point of unbearable stagflation, splat, game over. But we'll know, because we're not going to see a bubble pop. Is a bubble pop. We'll get a drop of, just like what happened with Bitcoin, just like what happened with XLM. You know, it got up to its all-time high, boom, immediately 50-60% drop, right? That's a pop. Yeah, we'll see that in the stock market, but the leading indicator for us will be the 10-year yield. If we're seeing the 10-year yield 10 basis points at a time, higher and higher and higher, then we know that stocks are going to be selling off a lot quicker, harder and faster as bonds sell off. Yeah? And then we'll have the big one. But that may be years from now. There's just no telling, really. Time is relative. But what I can say is certainly policies are around the corner. New monetary policies, new monetary regulations are on our doorstep. But in any case, Stellar XLM will benefit. Stellar XLM will be part of this new monetary system, and trillions will flow into blockchains like Stellar XLM. I'm Nathan, aka Nathan of Zion. Smash the Zion coin up there, like and subscribe, and check out the next video. It's going to be on Stellar, and you're going to need to watch it because it's going to be interesting. Have a great day. see you in the next one. Take care now.